Hello. For those that don't know me, I'm Andy Fabian, and I became CFO last year when Malcolm retired. I'll try and be quick because now you're all waiting for your coffee. But I'm going to give you an update on the finances for LINX, some of which you've now voted on in the AGM. Just going to cover three areas. The annual report, which was posted out a few weeks ago and is now on the website as well, but also covering other financial activities, because we don't just work on the annual report, and a little bit of an update on current financial position. So basically, I would say that in the annual report, we made very good progress against what we were planning, which included continuous investment to improve efficiencies and things like that. And overall, LINX is in a strong financial position. And by that, I mean we have very high recurring revenue, which I like, positive operating cash flow, and good financial reserves. I'll go through a few particular areas on the annual report in a bit more detail. So revenue, I think you saw from some of the graphs that Jen presented. We've increased the connected capacity at LINX by 17% in 2024. Although the migration to 400G was a little bit lower than we were expecting, but that was slightly compensated for by higher 100G. So overall, we were slightly down on our plan by about 1.5% on revenue. But having said that, the overall growth in revenue year on year was 14%, which we're very pleased with. Most of our revenue, as you know, comes from the sort of core peering and network access, which is roughly just over 2/3. But other areas that are growing quite well are the co-location services, which grew by 30%. And we retain a very high gross margin of 72%. In terms of operating costs, we were very close to our budget overall. The SG&A was slightly over budget because there were some one-off items last year, and also some of the stuff that Jen mentioned that we've been spending on, which perhaps is not visible to all of you, is on security and compliance and areas like that, which are quite important. We ended up with a group deficit of just 0.1 million before tax. And as you know, we're sort of running this business for the benefit of the membership. We're trying to make maybe a small surplus, or certainly we're not aiming to make huge profits. So we were pretty close to where we expected to be and close to where we were forecasting back in November. On CapEx, we spent 2.2 million last year, which was a bit below our budget and lower than the previous year. And having said that, we did some good projects, a long one refresh, which I think Richard talked about, and as well as overseas expansion, and also investing in software development to improve the automation of our systems. Cash is always king, and our cash flow and reserves was good. We had a positive operating cash flow, 1.7 million, which was a bit below the previous year, but nevertheless is a good measure for us. One of the things that if you do read the annual report, you might see that we changed the presentation for our cash and reserves, basically following advice from the auditors and looking at accounting standards. We effectively separate the deposits from the cash and cash equivalents. So I can certainly talk to any of you in the break if you're interested in that change. But we're basically managing our funds in line with our treasury policy. I won't go through all these, but there's lots of detail there in terms of the income statement and the balance sheet. Right, so apart from that, what else have we been doing? Well, as Peter mentioned, we have appointed new auditors, RSM, and that arose out of a desire to review how we were doing with our auditors, And so we did a tender and, a sort of competitive tender, and RSM won, and we're very pleased with that. So I'm hoping the AGM result has voted them on. The other thing we did was we revised our treasury policy. This is all to do with how the finance team manage the reserves and make sure we've got enough money to pay our bills and grow and survive and live, because obviously as a membership organisation we don't borrow from banks, we don't raise money from members, we have to be self-funding. So we did some changes there, and that was all very helpful. And we've also done a lot of work on the overseas expansion, things like setting up bank accounts, dealing with tax issues and FX. So lots of activities there. And finally, because I know you all want your break, just an update on current trading. I would say we've made a good start to the year. It's quite early in the year, I suppose, but we're perhaps slightly behind budget on our revenue, but nevertheless, it's a modest growth over the previous year. And cash and deposits are in line with budget, and I will give you a further update in November. So I think that is me, unless there's any questions.
Thank you. Any questions? Thank you very much, Andy. We'll
Okay.
go to the coffee break.
Thank you.